Well, good afternoon again, everyone. This is Cynthia Tomaine with Interactive Brokers, and thank you for joining us for today's presentation on hedging risk and trading spot or cash FX positions. Now, with us this afternoon, I am very pleased to introduce Dan Kerrigan. Dan, as president of the NASDAQ Futures, is going to give us more information on using these spot or cash FX positions. So with that, let me move this over to Dan's slides. Let me see. Make sure, just a moment, there we go, we've got your slides up. And Dan, if you can unmute your phone, I'm going to pass you the ball so that we can get underway. Okay, Dan, I'm actually going to unmute it for you. There's a button on screen, so just be warned, you're going live.
Perfect.
There you are, Dan. Good. Always
Thanks,
good to start being able to hear you. Well, take it away, Dan. Thanks.
Wonderful. Thanks very much, Cynthia, and hello to everyone. My name is Dan Kerrigan, and I wish to welcome you to today's Interactive Brokers webinar with the NASDAQ OMX Market Street Educational Series. Now, today's webinar, it covers an extensive introduction to NASDAQ FX options, but a lot of you may be sophisticated investors. You might be first-time investors to FX options. So what is the key takeaway from today's presentation? Our product tracks the underlying spot FX market 1-to-1 or 100%. It is perhaps the purest way to trade spot FX today. And fortunately, you can do so all from the vessel of your Interactive Brokers trading account. Now, to manage your time expectations, the length will be about 30 minutes. And I know this time of day, schedules can get crowded, so you can always replay the webinar at your convenience. And feel free to submit some questions as we go along. I'll start off by just offering up our options disclosure statement, and important to know that today is the first step in your educational look at FX options, to keep in mind that options are not suitable for everyone, and you should check with your financial advisor. Certainly do a little bit of research, but also make sure that before you begin trading, that you take into consideration all the other components with regard to the trading, with regard to taxes, commissions, and all kinds of items. So with that in mind, why don't we go ahead and just kind of take a quick look at what we're up to today. Now, the NASDAQ Market Street Educational Series is based out of NASDAQ OMX FX, right here in the heart of Philadelphia's financial district. And we are the legacy exchange of what is known as the Philadelphia Stock Exchange, the first securities exchange in the U.S., having been founded in 1790. Well, we are principally an options exchange, and we are the seat for NASDAQ for FX options trading. Now, our location doesn't matter in the electronic world. All of our trading symbols are available for you today on the Interactive Brokers trading platform. And this educational webinar is with really one focus, and that is to give you a look at a product that tracks the underlying spot market 1-to-1. So let's get into it and take a look at what FX options can provide you as a trader in terms of your tool chest. Well, FX options give you an opportunity to basically implement any type of strategy that you might already be using in equity options, bullish, bearish, sideways, what have you. But now you can layer these strategies onto your various means of research in the Forex market. And there's also another great element of options, as you may be very well aware. Your time frame can be a big variance from super short to quite long term. If you're a fundamental trader, these products might make sense for you. But today's webinar is set out to give you a clear example of how to use our products to hedge in the spot FX market. And that comes with it an opportunity to understand how this product works in a look back at a trading situation. So let's move forward and take a look at how this product stacks up in terms of other markets in which you may be invested in FX. Well, of course, with options, fully paid premium is great on the long side because you know exactly how much you can risk. Nothing prevents from losing 100% of that investment. But just like being short options, you may have unlimited risk. So these products fall a little bit higher on the risk/leverage scale versus owning outright an ETF or maybe even a foreign stock or bond. And the time frame for these products, again, rests with you, the trader. If you're super short term, they can work for you. But these basically fall in the category of more in the short-term quadrant. Well, fortunately, the NASDAQ FX Options lineup covers all of the major currencies, and they are all priced in terms of US dollars to get one foreign currency unit. So, for example, here we simply say, how many dollars does it take to get 1 euro? We're going to go through clean examples of how this works, but let me first turn your focus to a chart that probably many of you look at on a daily basis. Here's the spot euro snapshot earlier this year. I'll look back to the middle of last year, and you can see the spot price for the euro. The price convention is 1.3600. In other words, you would need to pull out of your pocket $1.36 to buy 1 euro. Well, what we have done with our options product is we have actually created what is really an index lookalike. And in fact, we disseminate a euro spot price, but we move that decimal point 2 places to the right. You can see the trading symbol at the top of your screen is XDE. And if you were to put into the Interactive Brokers trading platform now, XDE, you would see our underlying price. And of course, you could hit up an options chain if you so choose. But just to keep in mind again, we move that decimal place 2 places to the right, and that will figure into how we manage our options strikes. Now, why would you set out to be a purchaser of a call or a put on FX options? Now, fortunately, the way this product is designed, it really is akin to any type of an equity or index investment when you take into account the variability of various trading strategies. So in the event you're simply bullish on a particular currency, you might make an outright purchase of call options. Well, of course, you can be bearish and make an outright purchase of puts. But in this case, every time you should think about where do you think that currency is moving, higher or lower. Our product allows you to basically track that movement. Again, thinking of it just like a stock or an index. Am I bullish on the outlook for prices moving higher or prices moving lower? Now, in terms of our FX options, they are offered in a transparent open market trading platform, no different than options that we carry on popular equity names that you perhaps know and trade today, like Apple and Microsoft, for example. These products can be held in your Interactive Brokers brokerage account, and they are fully electronic, and that includes your ability to do complex orders, call spreads, put spreads, butterflies, you name it, and it's driven by specialists and market makers. So your ability to interact in this market is really an experience which is akin to perhaps how you already operate in terms of equity options today. And we have short-term options for a month and expirations heading out for a year. Well, let's take a look now at the base contract specs to get an idea of what this product is all about. For the first 6 currencies, as you can see from the Aussie to the Kiwi, the underlying contract size calls for 10,000 units of the foreign currency. Now, the yen is a little bit different. As you know, different price convention, that takes 1 million currency units. In the example that we used earlier of the chart, XDE, that's the trading symbol that you would put in to the platform to get a look-see at the underlying price and the options. And the nice part about this option product is that it's European-style exercise, just once per month. And it's all settled in USD. There is no physical delivery of any currency at any point in time. And if there was another takeaway today in terms of the ease of using this product, in terms of the replication of equity options, that you just need to use a $100 multiplier times any type of premium that you would see on the screen. Market hours are equity hours, 9:30 till 4 p.m. So let's just recap a couple of salient points of contract specs. The $100 multiplier can be used to figure profit and loss calculation. As you can see, it's 210, 214 in this hypothetical example, and if you were to buy that offer, well, you'd need to pull $214 out of your pocket. Call or put, what have you. Price you see on the screen, just multiply it times $100. In the strikes, as I mentioned, we move that decimal point 2 places to the right, so it looks like an index price, and we have whole strike prices are available, or what you might find if you are trading in spot forex now, the big figure. Now, as I mentioned shortly before, our FX options carry with them the ability to implement a number of complex order strategies. And you're only limited up to 6 legs, but it can be any 6 legs that you seek to choose to deploy. Often traders, when they look at complex strategies, they might look at an iron condor for a means of generating income in sideways markets. That can be deployed here, no different than an equity option. And of course, any time that you were to enter a complex order, you're probably akin to calculating the risk and reward parameters on equity options. It'd be the same thought process here. Now, finding a way to generate trading strategies in sideways markets, sure. Opportunity to sell call spreads, put spreads, definitely is possible with this product. But again, everything that should be taken under consideration to the risk tolerance level of your trading account. Now, the great part about this product, as I mentioned, European style exercise, just 1 day per month. You don't have to do anything. At expiration, we mark to market on the 3rd Friday of the month, a spot price, a snapshot taken at 12 noon Eastern, and we use to mark that all options. So if your option is in the money, you will get a cash credit for the difference between the snapshot price and your strike price. And of course, if your option's out of the money, it will be marked at 0, and of course, suffering a full loss of that premium. Now, there's no restrictions on getting in or getting out. You can buy or sell these products at any time. And any business day, the equity markets are open. We're open for FX options trading. Well, let's dive into the heart of the webinar, which is an actual hedging example for the British pound. And I kind of like to call it a glass half full, glass half empty kind of an example. I think you'll see why soon enough. Now, as the saying goes, hindsight is 20/20, and here you can see British pound price activity for the year of 2013. And you see that big happy arrow in the middle of the page. Well, imagine you're in a position where you're a corporate treasurer and you have exposure to the British pound. You just went through a pretty precipitous decline from the first of the year. It looks like around 163 level all the way down to 149 at the beginning of March. And then the market chopped sideways, actually had a pretty good recovery. So you might have taken the decision, look, I want to lock in my hedge at this point and lock in an exchange rate that I feel comfortable about, whether the pound goes up or down. Well, in this example, we assumed you timed it right. You put on the hedge on the absolute high of that day of that move. So keep in mind a snapshot of this picture. You see a pretty precipitous drop and then a long stair-step climb over time upwards. Well, here's the trade broken down. Let's say you have 1 million British pounds in the bank that you need to protect from its exchange rate because you're going to look to move that into another currency. In this case, the dollar at some point in time. So there, early in the year, you could look at a number of options to examine to place a hedge. In this case, you chose the very end of the year, December 2013, and you'll find, just like equity options, our convention for options is the exact same, months, years, and of course, the actual expiration date, the 3rd Friday of every month. Well, the underlying in this case being the British pound, you're after one thing. You want to lock in the price because you feel the British pound's going to drop. So essentially you're bearish or short pounds. And you're certain that your analysis is that there's a potential for a drop in the value of the pound versus the dollar. Well, let's look and see what our options are for putting on this hedge. So we examine what's available in terms of the option strike. Now in this case, we're trading the British pound, which has a different trading symbol. I'm going to try and circle it here, XDB, and that would be the trading symbol you would put into the Interactive Brokers platform. That would allow you to locate an options chain. And in this case, we've chosen a at-the-money put of 158 strike, again with a December 2013. And this is pretty early into the second quarter, so we've got a lot of time to go. So now let's look at the potential for this selection of a put. We're sitting here early in the second quarter. We picked a option more than 6 months out and at the money. So what are we going to pay out of our pocket for this option? Well, the market price at that point in time was 7.5 points. Or again, keep in mind, just taking that $100 multiplier and multiplying it by $100 to come out with $750. Now keep in mind, these examples today will not include any type of commissions and no provision for taxes. And of course, none of these suggestions today should be considered as a recommendation. So what happens with this pound option when we go forward? Well, we set out, we buy the 2013 British pound 158 put for $750 per contract. But we have 1 million British pounds to protect. So we're actually going to buy 100 contracts. Again, 100 contracts times the underlying currency units of 10,000 British pounds brings us to 1 million pounds. And essentially with this hedge, we have the expectation that the pound will move below 158 before this option expires in December of 2013. So in terms of where we stand, out-of-pocket costs is going to be pretty substantial. It's right here, $75,000. That is $750 per option times 100 contracts. But importantly, whenever we go into an FX options trade, we are able to determine the break-even price no different than if this were an equity option. And as you can see here, our break-even is very simple in terms of the math calculation. Just take the strike price and subtract the option premium. So in this case, 158 minus 7.5 points, 150.50, or akin to the spot British pound price of being 1.5050. And as you very well know, at any point in time when you pay for options, if the market doesn't go your way, these could go to zero. And that would represent a loss of 100% of your upfront paid premium. And of course, that's before options, the commission rate. So let's move on with the trade progression and see how things worked out. Now, remember, from the chart that we showed, there was a pretty precipitous drop, about 10 full points in a matter of 4 weeks. And after we examined the pricing, July 9th, that pound had dropped, again, almost 10 points to 148.50. So keep in mind, we bought the 158 puts for 7.5 points each. And now let's look at the current bid-ask on the screen, again, which you can find on the Interactive Brokers platform. At that point in time on July 9th, 2013, that market was 1460 bid, offered at 1470. So assuming you were going to sell your put options right there that second, you could actually realize a trade price of 14.60 points. Now again, subtracting out the premium you paid gives you a net premium gain of 7.10 points. So multiplying by $100, you've now got a profit of $710 per option. So that $75,000 hedge is now worth $146,000. And while these percentages look great, up 95% less than 1 month. And there's more than 5 months to go before this option expires. But remember, thinking back to that chart, we picked the one point in 2013 where there was a precipitous sell-off in the second quarter. And then if you recall, the pound did an about-face, started a rally, rallied all the way until December. So as this is a hedge, the point of today's presentation is to point out your out-of-pocket cost. That's the insurance that you're paying to hedge 1 million British pounds. And of course, market forces may dictate that it goes your direction and you may have a profit which you can sell and realize. But of course, the flip side with the hedge, in this case, the British pound moving the opposite direction, the value of this hedge would have, if you kept it till expiration, would have expired at zero. But at least from a business perspective, you can determine what's it going to cost me to hedge 1 million British pounds. Well, in terms of providing a summary in terms of today's webinar of NASDAQ OMX FX Options, keep in mind there's no special account opening procedures. Our FX options can be traded in any options approved account. That is approved for foreign currency options. Just check with Interactive Brokers. And all option strategies that may be in your toolkit, they are certainly available with our FX options products. However, I mentioned in here, there is no way to do the covered call because, again, these are cash-settled options and there is no delivery. Expiration, the same as equity options on that third Friday of the month. European-style exercise, no surprises coming in the morning and wondering if you got exercise or not. And it's basic trading acumen. These products were built for traders who, when they think of bullish outlook on price movement for an equity, they can apply that same thought process to a foreign currency. In this case, the really clean examples of buying a FX call if you want to get actually long that foreign currency, or buying an FX put if you want to get actually short that foreign currency. Given that these are cash settled in US dollars, your account today, I assume with the FX product, you have equities, equity options, they all sit side by side. Now for more information, I'd like to provide for you the website page, NASDAQtrader.com/FX options, and it will provide you with even more information about our product. Now, we understand that your time is valuable and it's hard sometimes to think about new products for use in a trading and or hedging portfolio. Our product allows you the wherewithal to track the actual spot market one for one. It's a very different proposition from the foreign currency ETFs that are in the marketplace today. Those carry with them management fees. So they don't have a perfect correlation because they have to net out that management fee. This product allows you that vision of knowing that when you put on a trade, it's tracking the Forex market spot value as its underlying driver. Now, today's webinar has all been with the mind to educate and inform investors about NASDAQ OMX options offerings. And keep in mind that today's examples were just that. They were examples. Glass half full, glass half empty, I think is a good saying to take forward when examining new trading strategies to see especially if it will fit the risk appetite of your portfolio. So with that in mind, I'm going to wish everyone good luck and good trading, and please visit us at NASDAQtrader.com/FX options. Have a great rest of the day, and I'll turn it back to Cynthia. Thank you so much.
Okay, well, I would like to also remind everyone, if you happen to have any questions, notice there's the chat panel in the lower right-hand corner of the screen. Now's a great time to ask those questions while we still have Dan available. Now, while we're waiting for any additional questions, I did want to quickly, I'm going to grab the ball back for just a moment and take you out to the Interactive Broker platform. There's a few things that you should be aware when you do want to add these to your trader workstation. Now notice I'm sharing my desktop and your screen is going to blank momentarily. And in just a moment you should be able to see my version of Trader Workstation open. Now notice here I happen to have both or all of these options listed here, but rather than as you do with equity options, you will need to add these indices into, or the index into your trader workstation, and then from there request the options. So notice what I'm going to do is simply add into the input field XDA, which is for the Australian dollar. Now notice when I hit tab or enter, I am presented with the choice, and it's the index value that you want here. I'm going to go ahead and close off that meter, and let's close off this. But now notice that from here, a simple right click on that ticker symbol will give you the ability to go into our option trader. Once you're in the option trader, notice that you can add multiple tabs. But I do want to warn you, rather than adding a tab separately here, you will have to add it to your monitor list and then open up either the option chains or the option trader. So notice here we do have all of the the next 3 expirations and the 7 closest strikes to the at-the-strike price. What I'm going to do is simply right-click here and show you that you can also put the background shading on with our description. The calls that appear with the light green shading are currently trading in the money, where notice the light red shading is currently out of the money. You can also see the same information available over on the put side. Greeks, of course, are available as well, and notice wherever you see that configuration wrench, and I'm going to bring our delta back for just a moment, notice that there will be a section for all of the Greeks. So you can simply add those, and since I already have gamma, vega, and theta, I'm going to simply expand, choose delta, and add it. Once you click apply and OK, it will become part of the option trader window. Now also for Mosaic users, I'm going to quickly jump over into Mosaic because you'll see that when you add your watch list, it's the same information here. You can go ahead and add from here, but then notice when you do add that ticker symbol, choose the index, when you want to go to the option chains, again, a right click on the ticker will easily take you out either to our option trader, I'll go into option tools, or into the option chains. So whether you're a Mosaic user or one of our legacy trader workstation users, those options are available on either interface. Now, also do want to point out that some of our more recent option trader tools or tools for option traders are also available. From the Mosaic, I'm going to go to the New Window button and show you that the Option Strategy Lab will also populate for, based on your forecast. Notice that you can add with the Edit Scanner button, add your forecast of what's going to happen, and then also evaluate multiple different strategies here. So did want to point out that our tools work with these options as well. Now, what I'm going to do is take us back. I'm going to stop sharing right now, but I want to take us back into the main event window so that if you do have any additional questions, please go ahead and add those into the chat panel. And as Dan mentioned, notice that I've also put that paper that he, or that website link to the page with NASDAQ Trader for those FX options. You can simply copy that and go directly to additional information. Now, I do have one piece of business that I do need to run. IB's management does ask that I run this in each event, and you'll find that I'm just going to open up a poll on your screen with 3 short items here. I ask that you make your selection, and 2 of those are multiple choice, and then simply click the Submit button. That will actually allow me to compile that information. Polls only open for a short time, so please make your selections. Now, also notice number 2 has an input field. If you've got comments or suggestions on other topics that you'd like to hear more about, that's a great place to put this, or put those comments, because I do review this with my management team on a weekly basis. So thanks, everyone. If you do have those suggestions, please type quickly. Poll will end. Just everyone make sure that you do click the Submit button. Okay, thanks everyone. Poll did just end, and that information is very helpful. Now, once again, I'm going to take us back over into the main event window, where if you do have any questions, I'm not seeing any questions come in, but we will be concluding today's event. Want to remind everyone we have been recording here today, and the recording as well as the slides that Dan has been using will be available to you as you exit today's session. So simply watch for a new PDF copy to open up, or also remember that you can always access this information and the Interactive Brokers website underneath the Education menu. There's a recording link there. Just remember to go to the Industry Sponsored tab for today's playback. Well, with that, I'm not seeing any additional questions come in. Dan, I'm not sure if you've gotten any questions privately.
No, I think we're good. I'm very appreciative of everything today, Cynthia, and look forward to more webinars with your customers.
Oh, looks like there is a question, Dan. Hold on, don't drop off yet. But P was asking, you cannot cash it in between, and I think what he's referring to is they're European style options, right? Could you expand on that, Dan?
Sure, you can definitely cash in these options at any point in time after you buy it, and that's simply by exiting the position. So if you buy a put or call, you can sell it 1 second later or a day later or a week later and either take your gain or take your loss, of course, before commissions. And yes, these are European style options, so only 1 day per month, and they're automatic exercise. So on the third Friday of the month, we take a snapshot of the spot price at noon, and we mark all options to it. So if it is 0.01 in the money, we will automatically credit your account if your strike is 1 penny in the money. And of course, if your strike is out of the money, it'll expire at 0. But indeed, European, and sure, you can sell these options at any time, no different than an equity option. That's what I'm seeing.
Thank you. He says thank you as well. Well, I want to express my gratitude for Dan Kerrigan and his dedication and NASDAQ's dedication to educating traders, and that's what's made today's event possible. So thank you, Dan, for all the work that you've put into this, and thank you as well to all of our participants for the time you've taken out of your day to spend with us. That is going to conclude our event today, so you can exit using the X in the upper right-hand corner of the screen. Thank you all for your participation. Have a great day, everyone, and please remember to trade smart. Also, be on the lookout for the slides, and please do check out that link that I entered here earlier as well today. So thanks, everyone. Have a good one.